the folks at Financial Derivatives Company has the new finance bill in their crosshairs. Of course, the VAT to 7.5% is the biggest story for Nigerian consumers. Temitope Olubile from Financial Derivatives Company, a member of the economic think tank. Thank you for coming. Good morning. I'm sure this is not news to you folks, really, but now that it's signed into law, changes the game.
Yes, it does.
So,
yes.
In terms of your regular market survey for goods and services, I'm sure you start to price this in and check how things go as soon as it all goes out. It's all system go as it were.
Yes. So, like you said, the finance bill was signed into law yesterday, and yeah, the one that affects the part of the bill that affects the average Nigerian consumer is the immediate hike in the VAT rate to 7.5%. So, I think that one of the things that makes the finance bill interesting is how it will be implemented, because there's so many caveats that need to be watched out for, and the public needs to be sensitized, and the taxpayers and the stakeholders involved need to know about. So there's the one of the minimum turnover level. There's the different food items that are exempt from this list. The list has even been expanded to include more of your regular food items, more of your staple commodities. So yes, the fear for the consumer.
I'm sure rice will be excluded.
Yes, rice is excluded.
That's good.
So,
That's good.
So the fear for the consumer is, what would this mean for my disposable income? Do you understand? But because of these caveats,
we have some list of excluded items.
Yes.
So why is there so much fear yesterday?
Because if you don't know your rights, do you understand? It's easy for people
you don't know what applies.
Do you understand? It's easy for people to exploit it. So it has to be watched, and that's why it comes down to sensitizing the public, both the stakeholders, your supermarkets, your consumers, so people know that there actually is a list of commodities
I agree with you.
that are exempt. So
that some folks don't play games.
You understand? So it's not a case of consumers being double taxed. So they need to know about it, and implementation is key. Yes.
What else is burning on the economic list this morning?
So on our burning issues today we have that the Bank of England, it's the first meeting for a lot of central banks across the world, Nigeria included. So we have that the Bank of England is hinting at the possibility of a rate cut at its meeting on the 30th of January. We also have that the NSE seems to be on the winning side of this current liquidity surge, where year to date the market has gained 10.4%. So it is on the winning side of this. And then we have that retail diesel price is up to about 230 naira per liter. External reserves continues its decline and is currently at about approximately $38 billion.
The key story, the first economic data that we'll have for the new year is the December inflation.
Yes.
What's your take at FDC?
Okay, so our projection is that inflation for December would increase by 25 basis points to 12.1%. And when you have that logistic cost, like I said before, the retail price of diesel is now up to 230 naira per liter. That's seasonal effect. So you have that. You have the liquidity surge that we're currently experiencing. You have all of those factors playing in. And yes, our projection is actually that month on month we're going to see a decline, because the market is now starting to price in this border closure impact. We're starting to get used to the border closure and its impact on supply shortages. Yes, we still would like for it to be reopened. If it's going to be reopened, that would be good.
Well, what the customs and immigration folks said in the news was that, look, the land border closure is against those who want to do illegal smuggling.
Yes, of course.
It does not stop you if you're doing legal transactions.
Of course.
It's just a lot of clarity that the authorities need to provide. It's not a total land border closure that even an ant can't cross the border.
Exactly.
That's not the issue. If you're doing illegal business cross-border, sorry, you can do it. But if you're doing legal business, you can just walk across. Or if you have a truckload or trucks of goods you want to move by land, once it is legal,
yes,
and it can go, you just declare it.
Yeah, that's why allegedly there's even an increase in custom revenue since the closure.
In August.
There's that alleged claim. So yes, it's against the smuggling, and by and large, it's for the good of the Nigerian consumers to prevent
and the local industry as well.
You understand, to prevent expired products from coming into the market. So, but for the inflation figures that we're expecting for December, we're expecting an increase in headline inflation to 12.1%.
In terms of what the global headline stories would be for local consumers, it looks like it's good news on the side of the U.S. and China Thursday, Friday for the trade deal. But again, this morning the news came in that the U.S. has backtrack on calling China or targeting China a currency manipulator. It looks like Washington is laying the red carpet for the Chinese folks who will be arriving in Washington if they're not already on ground for this trade deal. I think it's a good thing the China is getting that look. They're off that list or that label being called a currency manipulator. That will have a lot of impact. So for consumers and for the global agro commodities and crude oil, this is some positive news in the current week.
Yes, it is. So if we take the agri-commodities, because, you know, the phase one deal is hinged on Beijing increasing its imports of U.S. agri-commodities. So,
like soybeans.
You know, yeah, exactly. So your grains will be on the winning side of that. You see wheat, soybeans, corn, you know, we're expecting an increase in those prices. That is good news for the global. But what about Nigeria, where we import these commodities and, you know, it forms a huge part of our import bill? And so, yeah, that is...
but at least if the two big elephants are not fighting, at least the rest of us can have a bit of a breather.
The
we can have some
uncertainty
peace
is coming from the U.S.
Exactly, because if you have the U.S. and China on the very major trade fight or trade spat, what happens is that folks are going to look around how to, and then those of us who are doing massive imports on this side will have to pay the price. But if the coast is clear between these two major world economic superpowers, then major importing countries such as Nigeria can
take a sigh of breathe a sigh of relief. You know, commodities markets it feeds off uncertainties, and we've had this uncertainty in the works for years, for at least more than a year. Do you understand? So taking off that huge uncertainty from the commodities market is actually a good thing by and large. So yes, we expect both parties to finally come to sign this deal, and we expect an easing in those. Of course, crude oil too is benefiting from that, from the easing of the tensions even between the US and Iran, and now taking off this uncertainty of the US and China's trade war. So crude oil too is, I mean, we're trading between $64 to $65 per barrel, which is still steady above $60 per barrel. So yes.
Very interesting scenario.
Yes.
Thursday, you come back here. We have a lot to talk about. The central bank moved or rescheduled the MPC meeting dates to 23rd, 24th. So we're going to see how that plays out. What's your outlook from FDC on this very first meeting in the new year? Thank you so much, Temitope Olugbele from Financial Derivatives Company.